Hey y'all, welcome back to Amina Lee TV. So today I'm gonna pick up where I left off and talk about the books that I'm reading to help me along on this journey to learning stocks, investments, and options trading. So if you watched my previous video, you saw that I invested in 3 books. Oh, you know what? And while we're here, I actually did receive the other book the next day, the Berkshire Hathaway letters to the shareholders. Let me make sure you guys see that. Another really thick book. That's one thing I didn't realize, is that all of these books are super, super thick, but I'm gonna share a tip with you guys to help get through this text heavy technical content that's really helpful for me. So I started with The Intelligent Investor. And if you didn't see the book list, it's The Intelligent Investor, Snowball, and then Berkshire Hathaway Letters to Shareholders. I'll link the list in this video again. But one of the things that I do that's very helpful in helping me to understand the content of the book is that I buy the audio version on Audible, or sometimes I look for it on YouTube. In this case, I couldn't find the exact version on YouTube, so I went to Audible, bought The Intelligent Investor, and as I'm reading each chapter, I actually listen along. And listening to it while I'm physically reading it is really, really helping me with understanding. Of course, coupled with the fact that, and like I mentioned in my previous video, that I'm studying Wall Street Trappers courses as well. So having all of this information, like having him explain this information in his language, we both kind of speak the same language, you know, from a cultural perspective, and then getting the technical aspect of it, it's like everything is really falling into place. So a part in my, I know you see these little, look like my skin is peeling. I did a chemical peel, and I'm at the tail end. So if you're wondering, like, what is wrong with this child face? That's what that is. So in this video, what I'm gonna do is just recap those first 3 chapters, try to regurgitate what I learned. This is really helpful for me in helping me understand. You know, they always say, if you want to know how well you know something, start teaching it to other people. So I'm doing this one to help me better understand what I'm learning, and hopefully whoever's watching it also helps them as well as they go along on their journey, if you're just interested in learning all about becoming an intelligent investor. And I think that's what I'm going to name this playlist, Becoming the Intelligent Investor. So today we're diving into one of the most important books on investing ever written by Warren Buffett's teacher, Benjamin Graham, titled The Intelligent Investor. So I'm gonna cover like just the key takeaways from the first 3 chapters. And in chapter 1, which is called Investment versus Speculation. So that chapter is all about distinguishing between investment and speculation. So Graham defines an investment as an operation which, after thorough analysis, promises safety of principal and an adequate return. Now, on the flip side, speculation is any operation that doesn't meet these criteria. He emphasizes that a defensive investor focuses on long-term stability and avoids significant losses, unlike a speculator who chases quick profits with high risk. So if you're serious about investing, he suggests that you think long-term and aim for stability over high-risk speculation. That's chapter 1 in a nutshell. Then we have chapter 2, The Investor and Inflation. So chapter 2 discusses the impact of inflation on investments. Inflation erodes the purchasing power of money, making it a critical factor for investors. To combat this, Graham suggests including assets like common stocks in your portfolio, since they historically outpace inflation. And I hope this is not being too technical. I guess write in the comments if you feel like I should break this down a little bit more. So he also warns against relying solely on fixed income securities like bonds because their returns may not keep up with inflation. The biggest takeaway: diversify your investments to protect against inflation. And then lastly, chapter 3 is just like the stock market history, right? So in chapter 3, Graham provides a historical perspective on stock market trends and valuations. He highlights the cyclical nature of the market, showing periods of overvaluation and undervaluation. So he typically, or not typically, but he's generally advising that to look at long-term average level of stock prices when making investment decisions, and cautions against getting swept up in market panic. So if you understand the market history, it'll help you to stay grounded and make more informed decisions, is really what this chapter is encouraging you to do. So those were the first 3 chapters. They're definitely a lot more in depth than I just made it. But the one thing that they encourage is that investing is about patience, right? And thinking about it from the long-term perspective. So, and this is opposite of options, which is, oddly enough, the way that I'm learning it, you do have that opportunity to create a long-term, analysis of your option because you're not doing day trading. But that's a totally different video. I'm not going to get into that yet. The point of me learning this is really to get this foundational information so that I can be successful as a long-term investor as well as an options trader. So if you found this video helpful, make sure you hit the like, comment, subscribe, ask any questions. I feel like there's a part, as I was going over the recaps of these chapters, although they were short, it felt like it might have been a little too technical. If it was, I would love to hear your feedback, and then maybe I can break it down a little further if that's necessary. But this is just how I was able to understand what I read and make it into little bite-sized chunks. So thank you for watching, and I will see you in the next video reviewing probably the next 3 or 4 chapters.